Good evening, everyone. Hope you guys are doing good. Let me make sure I got everything loaded up here right. All right. If you guys can let me know, confirm you guys are seeing the DXY weekly chart. Great. Thank you, guys. All right. Hope you guys are having the most wonderful Sunday of your lives. Gonna get back to work here with a pre-market analysis. Again, just getting ourselves straightened out for the week, get our bearings, what we're looking for. Again, on an intermarket analysis, and again, get everything straightened out here for the week to come. So a few things I'm gonna touch on is just the economic calendar briefly. As you guys know, we have a bank holiday Monday. Typically, when it's a bank holiday on Monday, we'll just push it back and do the live stream look ahead on Monday. But I figured I already had Sunday on the schedule, so we'll just roll with it. But again, just keep in mind tomorrow's a bank holiday on the U.S., so not a whole lot of interest on my side when there is a bank holiday, and then even the morning session after a bank holiday can present certain difficulties. So really Tuesday PM session is when I see myself getting back in the saddle for trading. But that's what I'm seeing right now. That's how I'm going to engage with the economic calendar, and with that we'll get into the technicals. Ahmed, hey Dylan, great to be back. Love the new thumbnail. Appreciate it, Ahmed. Yeah, our marketing guy said we have to get more dialed in with branding and personalized images and whatnot. So probably a lot more of those new branding images to come moving forward. Appreciate that, Ahmed. Hope you're doing fantastic, my man. Francis, Satish, good evening. Curtis, hello. Market Madness, good afternoon. Mahmood, good afternoon. Frank, hello. Curtis, confirmed. Thank you very much. Francis, fine and dandy. Glad to see it. Adrian, good PM, Dylan and company. Glad to have you, Adrian. Maria, good afternoon. Glad to have you, Maria. Julian, hello. Raymond, internal range liquidity to external range liquidity. Absolutely. Zen, hello. Hope y'all survived Friday. I noted the red folder Friday ahead of bank holiday. Yeah, very animated Friday indeed. Very animated Friday indeed. Bim, hello. All right, guys, let's go ahead get into it. Sure, what we're looking at for this week to come. So as you guys know, we're going to start with dollar. Then again, we'll further qualify dollar with bonds, go into indices, take a few questions, and get on top of everything, and we'll be getting on our way. Monthly chart for DXY. Last week, or actually 2 weeks ago, I took our attention into this inefficiency here and saying that when we opened this monthly candle, that was the draw, right? Not a whole lot of range, right? Because we're in a consolidation. So not a whole lot of forward visibility to really give you guys, right? Unfortunately, if the market's not moving, I can't call targets and make it move. But I can work with the ranges we have, and that's just what I've been doing. So inefficiency here, easiest draw on liquidity that I could determine was the run into that inefficiency. And they've repriced into that nicely. Where we go from here, I don't know. It's anybody's guess at this point. I want to see how we trade there and what we do from here moving forward. Again, if we zoom out to a 3-month chart, which I showed you guys last week, we're in a consolidation, right? And if we go back down to the monthly, we're in a consolidation at equilibrium, right? So one of the lowest probability conditions to be trying to trade, right? Not to say you can't be traded, or not to say there is no analysis or you can't have targets hit. It's just going to present difficulties that comes with in the range consolidation trading, right? So that's why Forex and crew has been having a very difficult year thus far because of what we're seeing in the dollar, right? So currency markets looking like they're getting ready for some type of change in the financial system, which we could likely see this year with just considering the feverish pitch at which, or the feverish pace at which they're trying to implement central bank digital currencies and everything there. So that is being reflected in the currency market, which is why I'm focused on stock futures. So yeah, from this last thing on the monthly chart, from this inefficiency here, I'm going to want to see how we trade, right? Do we trade at this level, sell off and start making a run lower, or do we get above that and start expanding higher? That's all I'm looking at on a monthly chart. So nothing Nothing too crazy going on there. Weekly chart. So we've been calling dollar higher for you guys. Even had to again bring out some of the big guns, right? Use COT, seasonal data, as well as market structure and the technical analysis, of course. But all that was telling us higher prices on dollar, which we've been calling handsomely. So we had to run into the sell side or buy side here, excuse me, relative equal highs. Market traded up into that nicely, and then we had this inefficiency here I took our attention to. Then above that inefficiency, we have a bearish order block. So the market traded up into the bearish order block last week, expanding higher, and then not able to sustain the premium levels and closing near the low. So again, right now, just very lethargic, sloppy delivery in dollar. Yes, we've been calling it higher, and look at what each week has done. Open, expand higher, open, expand higher, open, expand higher. So the bias is there, right? The higher prices, seeing that it's gravitating for premium levels. We're able to see that, but the delivery is just not very clean, right? There's just not a whole lot to be seen in currencies at the moment. And then again, we hit that weekly bearish order block, the wick midpoint, and then the market trades lower, unable to sustain that. So just looking at the underlying order flow on a weekly daily chart, it's indicating it's bullish, but there's not a lot of strength in the delivery, right? There's not a lot of displacement closing above these key levels. You're really indicating it wants to rally anywhere past that. So that requires me to do what? Continuously refine throughout the time frames. So if there's no higher time frame analysis, it doesn't necessarily mean that there's just no trading, right? Or there's no setups or there's nothing to do. You just have to be able to refine throughout the time frames and just know what you're looking for. And that's what we're going to get into now. So hitting the weekly bearish order block, I want to see how we trade there moving forward, right? Do we hit this and start to sell off and make a run for the equal lows here? Or do we trade higher, get above this level, and then make a run for the equal highs? I don't know, right? It's anyone's guess at this point. Just going to take it week by week, day by day, and see what the market gives us. All right, so daily chart looks like there's a lot going on here, but it's not that much. This is the weekly bearish order block, and then all I'm labeling here with this green rectangle is just this huge inefficiency, this sell side imbalance, buy side inefficiency, right? So qualifying to you guys that it's inefficient, we're bullish, the market's going to do what? Pull up into that inefficiency, right? Because if it's going for liquidity here and here and here, as I've touched on in the previous weeks, the algorithm goes up for two things: stops, orders, and the inefficiency in price delivery. And that's what we saw here. And then again, all this level is our weekly bearish order block. The market hits that, then we pull back into the range. So continuously calling higher prices. And then last week, I left you guys off with this high here as the drawn liquidity, and then this inefficiency. More specifically, refining that, gave you guys the bullish breaker here, right? Low, lower low. What's the highest up close in this range? Extend that through. And then look at the delivery there. Look at the support at midpoint. Fair value gap, breaker, uses it like a launching pad to expand higher into the buy side. And then deeper into the daily inefficiency. So just nice delivery there. And then the market pulls back down into the range. So yes, we've been calling it higher, but not a whole lot to do with this market, right? It expands, consolidates, expands, deep retracement. So high resistance delivery in nature and not a whole lot to go off. So seeing how we rejected these levels here, I'm going to want to see what we do here in a lower time frame. So the order flow is bullish on a daily, weekly chart. So not saying it isn't, but there's nothing decisively telling me this market's going higher, right? We traded above the buy side here into the bearish order block, and the market immediately slams lower, unable to hold its footing and keep expanding higher, right? So that's telling me that the market isn't very bullish. All right, we'll drop right down to the 4 hour. So again, this is what I have to do, right? If the higher time frame, weekly, daily isn't clear, I can trade without a daily bias, and you can too, right? If you know what you're looking for. But you got to know how to reference your intraday liquidity. And if you know how to reference intraday liquidity and know how to derive a narrative from that, you'll have no problem trading without a daily bias either. Early on, it's not recommended to trade without a daily bias because it gives you a lot more clarity, right? But when we're in situations like this, we don't have that typical clarity. So there's the bullish breaker in purple. Beautiful support there. Market's off to the races. I'm going to take that off though, just to clean the chart up. So what these two blue levels are, I'll go back up to the daily. That's the inefficiencies here and here. And that's all I'm denoting with the blue rectangle. On the 4-hour chart, market trades up, hits the weekly bearish order block, midpoint. Look at the body stop in there. Market trades higher, clears the stops above this high, and then we immediately slam lower. So what I'm seeing right now is bearish order flow on a lower time frame, right? Seeing how we traded up to the targets that we called, right? These equal highs, told you guys the market was going to run into that. It did. And then past these highs, it's going higher for what? The stops, but also the inefficiency, right? So the market trades up into that inefficiency, but look at the signatures around this key level. Unable to close above it. Market trades higher above it. Do we sustain that rally? Does it displace through that high? No, it's unable to, right? So it breaks back down into the range. And then we start to see premium levels act as resistance. So if we continue to see that, right? So we'll actually, before I get into that, again, when the higher time frame isn't clear, we don't have that daily, weekly clarity. What we then have to do is go into our lower time frame charts, 4-hour, hourly, 15-minute, and read the order flow, right? Because then we can use that to then get our drawn liquidity, right? Right now, again, we're bullish on the higher time frame. Well, the order flow is bullish on a higher time frame, seeing higher prices, but we've reached a level and then we've pulled back into the range, right? So there's not a whole lot of clarity in one direction or the other. So what you have to do in that type of situation is be able to read the order flow. So what I'm seeing here is that we're respecting premium arrays and selling off, right? Market trades higher into this inefficiency and sells off. So if we continue to see that bearish order flow going into this coming week, well, there's sell side here, relative equal lows, and there's sell side here, relative equal lows. That's if we continue with bearish institutional order flow on a lower time frame. So again, when we don't have that clarity, that's what I have to do. So I'm still able to find drawn liquidity. I'm still able to see targets, but it's more of a day by day type of thing. As many of you guys remember, last year, in our trading and our analysis, we're able to see weeks ahead at a time, right? Call targets, for months ahead, right? But we just don't have that in the present market structure. So what we have to do is adapt to that, right? And understand how to trade that. So if we see that there's equal lows here and here, but the higher time frame is still indicating it's showing bullish order flow, that makes it difficult for a newer trader, right? Which is why I say it's better to trade with a daily bias as a newer developing student. But somebody that is more seasoned, that does know how to trade, you don't need a daily bias to trade, right? Because you know how to read order flow. You know how to determine a drawn liquidity based off what the order flow is telling you. So seeing how the body stopped here at the weekly fair value gap on an hourly chart, trade above it, and then we do what we reject. So we see this gap here. We open with a gap lower, it trades into that gap. What does it do? It sells off, right? It's not able to get above that gap, right? Real support and resistance. Sells off, market trades higher into these equal highs, and it rejects it. So in the lower time frame, we're seeing bearish order flow. So market trades up into the equal highs, sells off. So as long as the inefficiency, market trades into that, sells off, right? So as long as we continue to see that bearish order flow, I'm looking for lower prices. And that's how I'm going to go into this week, is taking it day by day, reading the order flow, letting the market tell me where it wants to go, right? Not having to force anything. And if we do get animated on the downside, if the bearish order flow does continue, we have equal lows here. Then we have relative equal lows here. And that's what I'm going to be looking for as a drawn liquidity if that continues. So it's a lot of if-then scenarios, having to weigh out what the market's indicating it's going to do. All right, so that's it for dollar. And we'll go ahead and confirm what we're looking for in dollar with bonds. And the analysis in bonds has just been dead on. Let's go to a weekly chart. So last 2 weeks here, calling bonds lower for you guys, right? We have the bearish order block, market trade into that, look at the body, respecting that. So once we had that signature there, before we even start this week here, I'm telling you it's going lower. Why? Understanding how to read institutional order flow, right? Look how it's respecting that bearish order block, unable to close above it. Wicks can color outside the lines. The bodies are going to tell me the narrative. Market sells off, running for the sell stops, and using the weekly fair value gap as a draw on liquidity, right? So I told you guys the market's going to draw. It's here. It didn't reach it last week. Is that a failure in my analysis? No, it's not, right? Because as long as we're trading in that direction or expecting the market to deliver in that direction, it's absolutely a successful analysis, right? Because the market's gravitating to this level. So going into this week, what I'm going to want to see is the market get down into this inefficiency, and then how we trade there is going to be critical, right? Do we hit this level, find support, trade higher, or do we get below it, use it as resistance, and sell off? That's what I'm going to be weighing out. So yeah, that's about it on the weekly. Looking to keep this one brief and to the point. All right, daily chart. Again, just a further refinement of the daily. We had beautiful sell side here, and telling you guys that was next on the agenda. And the market beautifully rips into that. So remember when we were all the way up here, right? When we closed this Friday and before this Monday candle opened. When we were here at this price point, remember what I was telling you guys when we were here? Indicating that there's equal lows here and here, and the order flow is indicating it's bearish. So what I told you guys was these fair value gaps here, here, and here. I told you guys that's not going to be support. If it's going to reach for these lows here and here, it's going to get below it, use it as resistance, and sell off into the lows, right? So that's how you understand how to read order flow. But the order flow is going to be easier to read if you have a draw on liquidity. Because I knew the market was going to want to gravitate to the sell side here and here. I'm not looking at the pattern. I'm not looking at, oh, this is a fair value gap. The market has to find support here and trade higher. I'm looking at it as it's going to get below those gaps, use it as resistance and sell off. Why? Because I know the draw on liquidity. Or not I know, but I have a high degree of conviction in the draw on liquidity. Nothing's ever guaranteed in the markets. Market trades lower into the sell stops here and here. Beautiful repricing. Trades into the inefficiency here and begins to sell off. So just calling bonds on a dime. Every time I call bonds really well, and the assets I'm looking at, like dollar or currencies, whatever, aren't moving, I think I should get into bond trading. But it's, if you look at the lower time frames, they're not as liquid. So sell side delivered beautifully, and now we have this inefficiency here. So I also qualified this to you guys as a breakaway gap. I told you guys that we would not fill this gap and that it shouldn't if we're going to be weak. How did I know that? Because there's a breaker here. So if there's a breaker, I don't want to see us violate that breaker. There's no need for it to get up here. So that's how I saw the breakaway gap, qualified it to you guys real time, and then here we are trading below the sell side about 1 week later, right? So just beautiful delivery there. And now we have the weekly inefficiency here. And again, as long as we remain below this breaker, below this inefficiency here, I'm looking for lower prices. If we get above that, then that tells me something else. And then I'll keep you guys updated if and when we get there. But for right now, we're looking at lower prices on bonds into the weekly inefficiency here, and then we have sell side there. But again, the moment of truth is going to occur in that weekly inefficiency. I want to see how we trade there. And then that's going to give me further prognostication as to what we're going to see on a longer term time horizon. Mahmood, just saw your question, caught my eye. How can I use ZB in my analysis? You're learning right now, brother. All right, let's go to T-bonds, or not T-bonds, excuse me, yields. We'll start from the weekly chart's good. So weekly chart on yield. So I qualified this SMT to you guys, right? SMT, smart money technique. It's a Kraken correlation. So when we see correlated assets that should be moving in tandem and they don't move in tandem, that's indicating something to us that something is going on behind the scenes, right? So qualifying this to you guys real time, telling you guys that 10-year did not make a lower low, 30-year did not make a lower low, but the 5-year did. So that's telling us something, right? And I didn't leave it up to your interpretation. I very clearly told you guys that that SMT is indicating to me, go ahead and zoom in a bit further, that we're going to see higher prices, right? Because that's indicating that the 5-year ran the stops, 30-year, that's a failure swing. 10-year failure swing, unable to make a lower low. And then we've been what? We've been off to the races in yields. So bonds, easy to see where they're going. One of the things that is a bit concerning is that we're not seeing that same symmetry, right? We're seeing bonds higher, and again, calling them straightforward, easy to read market. But what we're seeing on dollar is dollar's not one in the play, right? So we're seeing that, yes, dollar's expanding higher, right? You know, we've been calling dollar higher, but it's not delivering to the same magnitude as we're seeing in yields. So yields are strong. And over time, if we keep seeing yields continue to rally, we're going to see that strength come into dollar. So that's how I'm qualifying these things. But again, seeing bullishness in yields, and over time, that's going to weigh on dollar. So if yields continue trading higher as I'm expecting them to do, dollar should follow suit. So SMT yields trading higher into the buy side. Dropping down to the daily chart. We see that SMT and the market's trading higher for the buy stops here. Looking at the 10-year buy side here, and then the 5-year yield relative equal highs. Breaker, low, lower, low. Highest up close, breaker, coupled with an inefficiency. Market's off to the races into the buy side. So moving forward on yields, I'm trying to think how I want to phrase this. As long as we remain above this inefficiency here, that buy side imbalance, sell side inefficiency across the yields, as long as we remain above that, I'll continue looking for higher prices on yields. If we do get below that, then that would indicate something different to me. But for right now, I'm just looking for higher yields, and I'm going to expect dollar to follow suit simply based off the higher time frame order flow. But I already told you guys what I'd be looking for in a lower time frame and how to qualify that for you guys, for yourself, right? Knowing how to read the order flow, knowing how to understand what the market's telling you it's going to do, and then getting in line with that, right? Because that's what order flow helps us see into. It helps us see where the market's going to draw to and qualify whether or not it's going to draw there or not. So that's it for yields. Let's go right into stock index futures. So last week was an interesting week. We've had 5 weeks of just consecutive higher prices. And then it's reasonable to see 1 week retrace and have a down close week. And that's what we saw this week. So we traded lower, took out previous week's low, traded into a small inefficiency here, and the market trades higher off that. So trades below previous week low into the inefficiency, and we're still seeing support. So on a weekly, daily, we're looking at higher prices, right? I do not want to stand in front of a freight train and try to short this market. Frank, I want to clarify your question. So that means interest rates going to go up? Yeah, so yields are interest rate yields. So if yields are going up, that would imply that the interest rates are going higher, because these are the interest rates. So the interest rates for mortgages, homes, credit cards, whatever the case may be, they're all being derived from this. The 30-year yield, this is bonds that expire in 30 years. There are bonds that expire in 10 years and bonds that expire in 5 years. So it's just the different bond maturities, and that's what we're looking at, the respective yields here. And there's plenty of information on like Investopedia, or there's different financial websites that you can read up on bonds, the overall treasury market, and get more insight on that. But it's beyond the scope of what I want to explain here, because we'd be here all day, unfortunately. So weekly chart, we're still seeing higher prices. Again, market traded into previous week's low and the weekly fair value gap. And then from there, we're finding support. So the direction for the following weekly candlestick with where we're at, it's 50-50 to me. And again, same thing like on dollar, right? So I have to refine it through the time frames, and I'll give you guys the clarity as to what I'm looking for in a lower time frame. But as for right now, I don't have clear direction, right? I can't tell you guys this weekly candlestick's going higher or lower. And that's fine, right? That's not a weakness in my analysis. It's good to know that, right? Because now I know, what do I have to do? I have to go into my lower time frames and further refine what it is that I'm looking for. So dropping down into the daily chart, E-mini S&P. So the market traded lower Monday into Tuesday. Reclaim bullish order block. So hit that order block here, trading back into it once more. And the market expanded higher. And then what was interesting to me last week was after we closed above this inefficiency, I was expecting the market to keep running. But then what they ended up doing is taking it higher and dropping it, leaving relative equal highs. So as of right now on the daily chart, I don't have a clear one-sided draw. Right? I can't tell you guys with a high degree of certainty that we're going to see higher prices on the daily chart or lower prices. So again, that forces me to have to go into a 4-hour or a 1-hour time frame chart. So yeah, that's about it. Just very unstructured price action. That's the last thing I wanted to touch on as well. So daily fair value gap here. Look how we close below that, right? That's not bullish. But then we close back above it here. And then we close back up above this inefficiency here. And then we close back down below it. So on a daily chart, that is unstructured price action, right? Structured price action is where it's very easy to see, what the market's drawing to. Like by contrast, we'll look at this price action here, right? We can see what it's doing with visibility. It's respecting levels that make sense, right? It trades down into a short-term discount, into the fair value gap. What does it do? It rallies. From the rally, what do we have? Last down close candle. It's our bullish order block, the changing in the slate of delivery. Market refers to that level there, and the inefficiency. Does the inefficiency support price? Yes, beautifully, right? And then it expands into the equal highs. Market retraces into a short-term discount. How far can it go to the fair value gap? Does it rally from there? Yes. Down close candle hits that as support. Market continuously expands. So that is clean structured price action, right? Where we can see where it's drawing to, where it's going to turn from, and we just walk it on a tight leash every step of the way. But when we start seeing price action like this, where it's what I call unstructured, it's not really respecting anything, right? It's not giving me the institutional fingerprints or the algorithmic fingerprints that I want to see around price delivery that give me confidence the market's either going to reprice higher or lower. So when I don't have that, the daily chart is 50-50 to me, right? I don't want to call a top. I don't want to say the top is in here because I could easily just pass it up once more above that. But I also don't want to short here, right? So on the daily chart, I don't really have a lot to go off. So I'll show you guys what I have to do in my analysis, right? But not just telling you it's 50-50, good luck. Telling you why, right? It's not structured. It's not following anything with a high degree of certainty that I can see, right? So I have to, again, wait for that one-sidedness to come back into the marketplace. And that's going to come by way of the lower time frame, as I'm about to show you guys here. All right, so 4-hour chart for E-mini S&P. So we have these relative equal highs here and here, and then we have relative equal lows here and here. So this is my definition of a low probability market, right? Where I can justify the market going higher and lower. Because when you have equal highs and equal lows, which one's the market going to go to, right? Is it going to go higher or lower? I don't know. So whenever that's the case, it doesn't mean I can't trade it or there's no setups. It just means it's lower probability. So I have to reduce my leverage. And then even with that, I have to wait for confirmation for my trades because it's not just an easy slam dunk. Okay, this is where we're going, like it is most weeks. So on these weeks where it's a bit more difficult, I have to go into my lower time frames, see specific liquidity pools, and then from there come to my conclusion as to where we're going to go. But I have to read the order flow to be able to do that, right? Because right now we have equal highs and equal lows. Well, how do I know which one's going to draw to? The order flow is going to tell me. Well, what do I mean by that? If we're going to run into the sell side here, let me mark that out. Here we have sell side liquidity. Equal lows here, here, and here. So these are relatively equal. So if we're going to trade into the sell side, the equal lows, it's going to show me bearish institutional order flow, right? Premium arrays, levels above market price are going to be a ceiling. It's going to hit it and sell off, hit it and sell off. So as long as the institutional order flow remains bearish, I can trust that the drawn liquidity is going to be lower, even with equal highs above. You see how the order flow helps me qualify and validate certain things. So even in a low probability market condition, by knowing how to read order flow, there's still setups every day because the market's going to be running the liquidity and inefficiency every day of the week. So I use the order flow to further qualify or validate what I'm looking for. Because right now the draw, it can be both sides. But then when you add in order flow to your analysis and you know how to read it, that's going to be what tells you which one it's going to go to first. And you have to be more versed, right? Because in a situation like this, when it's easy, one-sided, everything's easy to see. We have dollar moving in a symmetrical direction with indices. We have bonds moving clearly with dollar. We have all those intermarket confirmations. The market's really easy to read. It's one-sided. We can call it. We can see the setups. The order flow is really obvious. But there's times we don't have that. So how do I have to adjust in my analysis and my trading? And that's what I'm sharing with you guys here. So looking at the order flow right now, it's bearish. And I'll tell you guys how I read that and give you a little more insight. Wick right here, right? The algorithm refers to wicks as gaps. So on a gap, we can use the quadrants, but for this illustration here, the midpoint or consequent encroachment is more than enough, right? We trade up into that midpoint. What's it unable to do? Get above consequent encroachment in that gap. Then we sell off. So that's indicating what to me? The market's not that bullish, right? It's not even able to get above midpoint of a wick. So then we sell off. So as long as you remain below that, I'll be looking for lower prices and we'll further refine this on an hourly chart and it'll be more clear. So we still have the equal lows here on the hourly chart. And then look at what I have here. So the range that I had the Fibonacci on is different now. I had the wick highlighted on the 4-hour chart, but what I have highlighted on this time frame is the order block. So on an hourly chart, the last up close candle before the rotation lower, that's our bearish order block. Extending that through, we have mean threshold right here. So going into Friday's trading, I had left off Thursday with my private mentorship group, telling them that I was expecting, gun to my head, higher prices into the buy side. Why? The order flow is bullish, right? It's telling me that discount PD arrays are stacking price higher and that it's supporting price into premium targets. So that's what I was expecting going into Friday's trading. I wanted to set up to trade up into this high. But what in the order flow told me it wasn't going to do that, right? It traded up into the wick, consequent encroachment. It traded up into the mean threshold of the bearish order block here. And then it's indicating it's not willing to rally further, and then it breaks down aggressively. So even though I had a bullish bias, by knowing how to read order flow, there was no losing transaction trying to force a long setup when it wasn't there, right? So we hit the mean threshold of that bearish order block, and market breaks down aggressively. Market retraces, but look at where we're at this point, right? When we're in the afternoon session on Friday, what do we have? We have equal highs here and here, but we also have what? Equal lows here and here. So when we're in the middle of the range here, which one's the market going to go to? Is it going to go higher or lower? I don't know. And as many of you guys know, I'm not a gambling man, right? I'm not here betting, right? If this was 50-50, I would never risk money in this, right? You know, it's logical. I'm not a betting man. So with that, if there's no one-sided draw, there's nothing for me to do. So I'm just having to wait for more information. I just ended up taking a small scalp trade back up into the range here, just premium the discount, just trading the retracement. But I didn't have the clarity, right? Is it going to go for these highs? It could. Is it going to go for these lows? It absolutely can do that. But I read what? Now the order flow. So I'm adding a new dimension to the analysis. Market trades up into the stops, into mean threshold, and then we get an aggressive breakdown. And when the market retraces, I'm studying how it retraces. Market trades up into the fair value gap here. That was created on the displacement lower, right? So that one-sided delivery, the algorithm's going to want to reprice into that. And then I'm going to study how do we trade there. Look at the bodies. They stop there. This candle wicks higher into what? Last up close before the rotation lower. That's our bearish order block. How do we trade there? Market aggressively breaks down, running for the equal lows here. So with these signatures here, then that's what told me in the afternoon that we were going to sell off, even with equal highs, equal lows. So you see how when it's not easy one-sided, how much more factors in my analysis I have to consider, right? So I can still find a draw. I can still see that it's going to want to reprice into the equal lows after these signatures here are communicated to me that it's bearish. But again, knowing how to read that order flow is what gives me that visibility into what liquidity pool they're going to want to reprice it into. And then they ended up taking it into the relative equal lows here. Or actually, it stopped just short. Stopped just short of those equal lows. So we'll see how they open it on Sunday, but there's equal lows here. And that takes me to my last point on E-mini S&P, which is we have equal lows here and equal highs. So which one's it going to go to? I just taught you, right? Knowing how to read the order flow. So when order flow is bearish, we're going to get below these daily fair value gaps, use them as resistance, inefficiency, bearish order blocks, they're all going to work. If order flow is bullish, then we're going to expect down close candle here, daily inversion, fair value gap here. It's going to all be support. But if order flow is bearish, it's going to use it as resistance. So understanding how the algorithm's engaging at these key algorithmic price points is going to give you more insight as to where it's going to go. So that's what we're looking at on ES. So are we going to the buy side or the sell side? Right now, with the current structure, with the current order flow, I say we run to the sell side first. But again, that can change. And now, more importantly, you guys just don't know what I'm looking for. But I didn't just give you a fish. Teaching you how to fish. So that's what I'm going to be looking for going into next week. Let's go into NASDAQ. I'll take a few of you guys' lovely questions, and I'll go and wrap it up. So weekly chart on NQ. NQ's a bit weaker. Market traded lower into previous week's low, and then we weren't able to really rally much higher off that. Trades higher, previous week's high, previous week's low. So big range week with a down close, right? 1, 2, 3, 4, 5 consecutive bullish weeks. So it's reasonable to see that retracement. So on the weekly chart, I don't know where this candle's going to go, right? I don't want to call it top in this market, but it's also, well, you know, I'll leave that alone. Okay. So not calling it top, looking for higher prices on the weekly, daily chart. But again, I'm going to show you guys what I'm looking for in the lower time frame and how to validate and qualify what it is that we're looking for. Daily chart for NQ, right? So very unstructured price action here as well. Consolidating, little run higher, back into consolidation, right? So not an easy market condition, especially for those that aren't as seasoned, right? If you are more seasoned, you can scalp, get your setups, get paid, bread and butter, and get out. But with the current market conditions, I can't tell you where this next daily candlestick is going to go, right? Right now, with what I'm seeing in the present structure, it's lower, but it's just not very structured, easy to read price action. So bullish order block here, market's respecting that on the closing basis, but it's also respecting last up close candle here. Mean threshold, it's respecting that as well. So we're really in between two key PD arrays. So we have to do what? Go into our lower time frames. So that's what I'm going to share here. So as long as you remain below the mean threshold of this bearish order block, I'll be expecting the market to work its way lower into the sell side. What we do from there, I'll have to see. Whenever we're in these types of conditions, my visibility is limited, right? And many of you guys, again, are used to me calling targets weeks in advance, right? Telling you where it's going for several weeks for quarterly shifts objectives. And I just don't have that clarity right now. And there's no embarrassment in saying that. I just have to wait for more information. And then once I have that clarification in terms of the price delivery and where it's going to go, then I'll be able to give you guys more foresight with my analysis. Yeah, and whilst I'm seeing the same thing, yeah, NQ is much weaker than E-mini S&P. So, yeah, touched on mean threshold, right? Trade up into mean threshold, unable to really mount any type of rally significance above that, and the market's breaking down. So very unstructured, not easy to trade price action, right? So being conscious of that with your risk management, with your leverage is all important to be conscious of. All right, so for 4-hour chart on the NQ, to see the 4-hour, difficult read outside of, surgical strikes, right? If you know what you're looking for, intraday price action, there's trades, but it's not the cleanest price action. So last week we opened here, traded higher on Monday. Anyone that wanted to chase longs or was trapped in buying on the breakout, they got raked across the coals hard last week. And then they took it into a discount here. Equal lows, that was the draw going into CPI's PM session. Just a really nice delivery on CPI. Trades into the relative equal lows here. And then from the sell side liquidity here and here, market trades back up into a short-term premium. Last up close hits that level here. And that's what I was monitoring going into the lower time frames on Friday's trading. So looking at how we trade here in the lower time frames, that's what gives me the confirmation as to whether we're going to continue or drop. And then if you go into like your 1-minute chart here, for example, sorry, can't see it on a lower time frame. Excuse that. Let's drop back down to the 1-minute chart. So when I say like see how we traded a key level, right? What do we see? Market trades up into that, and then we get a breakdown from it. So not indicating strength at an important level. So on the 4-hour chart, market traded higher, last up close, bearish or black, and then we get an aggressive repricing lower. So swing low, taken out, inefficiency. Market trades higher into that 4-hour fair value gap, but what's this right here? Go back up to that daily chart. That's that daily inversion fair value gap here. So I'm using these gaps in my lower time frames for analysis purposes. So we trade up into that, and then we sell off, and we're unable to get above midpoint. That's telling me what? Institutional order flow is not bullish, it's bearish. So we trade up into the fair value gap, market sells off. So looking at the present order flow, the present market structure, I'm looking for a run into the equal lows here and here. And that's going to be my bias going into early on in the week. And then how we trade there, I don't know, right? Like I said, whenever we're in these types of conditions here, my visibility is limited in the sense that I don't have analysis weeks out, right? I have to just take it day by day, price run by price run. And as of right now, again, in the current order flow, in the current structure, we're looking to make a run below these lows. And then from there, how we trade there are all things I'm going to be measuring, right? If we begin to accelerate, that's telling me something else, right? If we take these lows out and then reject like we did here, then that's going to tell me something else. All right. It's just a matter of waiting and seeing. But as for right now, looking for a run into the sell side based off what we're seeing presently. All right, let's get into the hourly chart. So again, there's these relative equal lows that we're looking at. So again, market trades higher to a breaker here. High, higher, high, breaker. So right, every higher time frame bearish order block is going to be your lower time frame breaker. Hits that level here, and then we get an aggressive breakdown lower. So with all the animation on the downside, that automatically pumps the brakes on wanting to be long, right? I was a buyer. Actually, I'll take that back. I was a buyer on E-mini S&P, just trading back up into the range, but that's all that was a scout back into the range. It wasn't like I'm going long, I'm fully bullish now. So when we retrace back up into the range, after seeing all the animation on the downside, this is just a retracement for a continuation, not an outright reversal. Why? Because the animation's on the downside. So animation to the low, aggressive expansion, market retraces the equilibrium from high to low. Equilibrium's about here. Daily inversion fair value gap, real support and resistance. Market sells off, equal lows here and here. So that's what I'll be looking for going into Sunday's trading, is a run below those lows. And then as long as the order flow again continues bearish as we're seeing here, we'll look for a run into the sell side. And that's what I'm looking for on the indices. So with that, I'll go ahead and take a few of your guys' questions. Again, I wish I could get to all of them, but unfortunately I don't have all day to hang out on YouTube. But I do appreciate you guys joining and watching what I have to share. And hopefully you guys find value in it. I do appreciate you guys hitting the like button as well. And showing the support, right, for what I'm doing here. Giving you guys my time on a lovely Sunday. Not as lovely. It's raining and cloudy here in Florida, unfortunately. But appreciate you guys joining us and hope this one was insightful. I'll go ahead and take a few questions now and then we'll get going. Roshan, last week, signals result, banking. Walter, can you take a look at crude? Yeah, let's see what we got going on with crude oil. So crude oil is just in a very difficult situation. So while I did call the sell side to you guys here, just looking for the lower prices, again, just as a continuation of what we're seeing on the weekly chart, the structure is really bad, right? So I prefaced it with saying, yes, I'm looking at the lows, but it didn't do that, right? So it's not me like saying a cop out, right? Saying, oh, well, I was wrong, but it's because it's low probability. It's not like that, right? If I'm wrong, I'm wrong. You know, that's fine. But giving you guys that analysis under the pretense that what we're seeing, this is very poor structure, right? This is not a market that any professional is looking at and saying, wow, you know, I have to be in this, right? So outside of scalping, you know, intraday trading, there's just not a whole lot going on in crude oil, right? You know, look at the monthly chart. What have we done? Nothing. So crude oil, again, is waiting for that next shoe to drop on the other side of the pond, right? And the other side of the world. Once we start getting more, gotta think how I say this, because like I said, YouTube, they have to keep control of the narratives and they don't let people talk freely. So I have to be careful with what I say. But crude oil is a very event-driven market, right? Especially on that side of the world, especially when you're talking about WAR, right? So when all that's going on, crude oil is a market that's going to be driven by that. So if there's escalation in WAR, crude oil is going to go to the moon, right? Because crude oil is what? It's the lifeblood of everything war-related. So understanding that crude oil is going to be driven by those geopolitical events, that's what it's waiting for. So when's crude oil going to move? When we start seeing escalation in WAR. Looking at the monthly chart, though, again, there's just no real high probability direction, right? It's not really doing a whole lot. So we have to do what? Refine it throughout the time frames. Weekly chart, very poor market structure, right? Since December. This hasn't been doing anything. So people that are trading are trying to push in this type of market, unless again you're scalping or you know to be nimble or surgical, just really hard to trade, really difficult to trade. But we can refine things throughout the time frames. So on the daily chart, even though it's not clear on a higher time frame, we're seeing bullish order flow. So I wanted to see the market trade into the sell side here, but then it denied me that. And again, I'm more likely to be wrong in these types of conditions, right? Like for example, if we go to British pound, right? And I'm calling, if I'm calling the British pound market for you guys, it wouldn't be the same Medora trading you guys know. It'd be, man, has this guy been drinking before the live stream? Because you just don't look at markets that are like this. Why? Because I'm more predisposed to be incorrect. So that's what I'm articulating here with crude oil. So if I was to call markets like this for you guys, it wouldn't be what you guys know our results and precision to be. But looking at the current structure, looking at what we're seeing on a daily chart, because the weekly is not giving me much, finding support inside this inefficiency. We have relative equal highs here, here, and here. So on crude oil, just on the short term, we have 79.77, and that's what I'm going to be looking for a run on crude oil. After that, I don't have a lot of visibility, right? Because we're still in a range. So I don't really like to gamble, as I told you guys before. And then if we go into, let me look at a 4-hour chart. Yeah, so looking at the 4-hour chart, market's showing bullish order flow, so it looks poised to run up into the buy side. And then, yeah, once we trade to the buy side, I'll have to see what we do from there, how we trade from these key levels. But right now, again, clearly communicating, why it's not really a market that is ideal. Because even when we were on this week here, I wanted to see the market run higher into the buy side here. But again, just because of that lower probability range that we're in, it even denied me that run into the buy side. I was trying to trade that, and it didn't give me that. So again, I'm just more predisposed to be wrong in this type of condition, which is why I know that, right? And why I know to step aside and not like to push it a lot. So hopefully that covers your question for you, Walt. Ahmed, bonds on point. Appreciate you, my man. Mahmood, how do you use ZB? I just explained that before. Ahmed, appreciate the clarification. Helping out my man, Mahmood. Market Madness, smash the like button for all the knowledge drop. Please do. Please do. Help a brother out. Hit that like button. Again, giving you guys here all this value, no charge, right? So help a man out and keep me motivated. Again, keep coming on here for you guys. Why don't you refer to the monthly time frame also for Power of 3? Who said I don't use the monthly time frame? I absolutely use monthly, weekly, all the way down to minutes. So monthly, weekly, daily is my higher time frame analysis. Lobo, good morning, bro. Good morning. Jason, can you show the trade you took on the lower time frame? I'm not sure what trade you're talking about, Jason. Ahmed, really appreciate the smaller time frame analysis. Gave me more visibility. Appreciate it, Ahmed. Yep, that's how you got to take it when it's in these types of conditions, like on a daily, weekly chart when it's not that clear. That's what you have to do. Just go down to the lower time frames and further refine it. So there's still setups. There's, especially as scalpers, there's always fresh bread, right? There's always new money to pick off the money tree when you're an intraday trader. KK, could you please look at UJ and GJ? Please, as they're all moving better. I have not seen dollar yen in a while. That's why let me take a look at dollar yen. And dollar yen is ripping. Man, I wish we could get this type of follow through on dollar. Yeah, so dollar yen is poised to rip higher. Probably what we're seeing in all those COTs, Tommy. So yeah, looking at these higher prices, we have the buy side here on dollar yen, and we're just showing bullish order flow. So I'd look for a run into the highs here, as long as we remain above this weekly fair value gap. So we have a weekly inefficiency here. Not saying it has to even come down there, but as long as we stay above that, we'll be bullish into the buy side. And then once we trade above that, we're at all-time highs for dollar yen, and then it becomes all-time high protocols. So yeah, just seeing continuous bullish order flow. Dollar yen, we have fair value gap here, and then an inversion fair value gap here. So I'd want to see us stay above that. As long as we stay above this inversion here, fair value gap here, we're likely poised to make a run in the buy side. So yeah, dollar yen moving pretty clean. Pretty clean. We have breaker, low, lower low. Is that smart money reversal? Market maker buy model. So I'd expect this to be like second stage distribution. So I'd want to see us be aggressive expansion higher. But other than that, nothing much more on dollar yen. What was the other market you want me to look at? GJ. GP. Yeah, it's been a while since I looked at pound yen as well. Yeah, long time since we looked at pound yen. Yep, so monthly chart, we're still seeing higher prices, still seeing bullish order flow. We have buy side here at the 196 on a monthly chart. So as long as we remain above this down close candle here, be our bullish order block, I'd want to see expansion higher on pound yen on a monthly. A weekly chart, we have our bullish breaker here, right? So low, low, lower low, last up close. I haven't been doing much for the Forex folks this year, but now that we finally got some movement, I'll go ahead and get you guys right with some analysis. So weekly chart, we have the breaker, low, lower low, inefficiency overlapping with that breaker, right? Powerful algorithmic signature. Market finds support, and we're expanding higher. So I'm going to expect continuous expansion higher on pound yen as long as we remain above this breaker. Anything above this breaker, we're fair game for higher prices. If we get below that, then we are likely going to run for these equal lows. But above the breaker, looking for higher prices, not shorting a market that's telling us it's reaching higher. And then daily chart. Yeah, daily price action isn't that clean on this market. But we have a fair value gap here. As long as you remain above the fair value gap and breaker, here now on a daily chart, will remain bullish, right? Fair value gap breaker. As long as you remain above that, we'll be looking for higher prices. So if we get below the breaker, that changes things. But as long as you remain above that, we'll be looking for higher prices. KK, hopefully that helps you out, my man. Yeah, currency's moving a bit better now. Wasim looks like market maker sell model to me after Friday. For indices, yeah, looking at the same thing. Mr. Nuller, YM, the Dow had the strongest PA this week on the indices. Yeah, it was definitely stronger to the upside. Anthony, could you kindly give me some explanation on the price action for NASDAQ Friday PM session? I'd love to, my man, but I have to get going, unfortunately. Ahmed, yes, I keep the higher time frame gaps and fair value gaps and use them on lower time frame. Helps a lot. All my friends are asking me how I know the levels in advance. Feel like a magician with your learnings. Appreciate that, Ahmed. And that's just with the YouTube stuff, man. So looking at, what you can do with this skill set if you apply yourself, and you're a perfect example, Ahmed. Just keep up the good work, my man, and, stoked to have just played a small role in your success. Keep up the great work, brother. Big things, man. Big things. Jason, can you show your trade? Not today. I'd love to hang out and answer your guys' questions, but I wouldn't have time to pull out my trade executions. High speed trading, crude oil. Already covered that for you, brother. Frank, thanks, Dylan. As always, great analysis. Appreciate you, Frank. Christian Cadet, all love, brother. Of course, good information as always. Appreciate you, Christian. Hopefully, you're getting the futures side of things sorted out and ready to do some damage in the futures markets, my man. All right. Just going to go through, make sure there's no more member questions. I'm going to go ahead and get going. Zen, thank you for the pre-market live stream. Pleasure's all mine. Breeze Dylan, do you use IPTA look back and cast forward and dealing ranges in your analysis? Yeah, I use all of it. All the above. All the above. If there's a tool, an algorithmic price delivery, I'm using it. I'm not using it all together. That's the confusing part for a lot of people, right? It's like, well, you have all these concepts, analysis ideas in your head. You know, you must be using everything when you're trading. I'm not. And if you guys actually saw how simple my intraday trading was, you know, it's almost laughable, right? It's literally just sell stops to buy stops at a specific time of day, right? And I just use an inefficiency for an entry. Seems simple, but there's different things to qualify certain tools, but that's really how simple my actual trading is itself. My analysis is a bit more detailed, complex, and layered because I have these tools at my disposal, right? If you did, right? If you were able to see the winning lottery numbers by doing extra analysis, you would do the same. So that's what I'm sharing here with you guys. All right, guys, that's going to be it. Walter took a look at crude oil. Already looked at crude oil for you, brother. Alistair, do you use power 3, standard deviations? Yeah, absolutely. Power 3, standard deviations, accumulation, manipulation stages, absolutely. All the above. All the above. KK, thanks, buddy. Focusing on the yen pair since dollar has been rubbish. Yeah, definitely wise to do. Focus on the cross pairs. Cobra, maybe the signal should be focusing forex now. Yeah, yeah. No, just indices all the way. Indices all the way. If there's swing trade opportunities, if there's higher time frame opportunities in the currency market, I'll take advantage of it. But for the most part, I'm very content with stock futures. Amy Moore, thanks for the great analysis. RTY and YM. Yeah, so YM's going to be relatively similar. We have equal highs here. And then you're just going to want to do what I shared on the lower time frame for the indices, right? Even though there's equal highs, if the order flows bearish, we can't just buy, right? So, Amy, what I'd recommend for Dow is just take notes on what I shared that I'm going to be doing for ES and NASDAQ, and it's going to be the same thing on Dow. RTY, not really much to look at there. Let me see. Usually a few people have me look at RTY. So, yeah, same thing on RTY. RTY actually made a higher high in efficiency. Yeah, so I just look at RTY day by day. We have relative equal lows, and as long as we remain below that hourly fair value gap, we're bearish. If we get above the hourly fair value gap, we're going to likely run higher for the buy side here. I got to get going. I have a meeting with my associates after here, so I got to get to work. Adrian, what's your take on the 3-point competition? Man, I wish I could have watched it, brother. I've been swamped, my man. Tell me your thoughts, man. Maybe you'll fill me in, Adrian. Mohammed, much love. Appreciate you joining us. Wasem, much love, Dylan. Thank you for your time. The pleasure is all mine. Appreciate you joining. Jay, what is the difference between... I wasn't going to take any more questions, but I have to answer this one. What is the difference between CFDs and futures trading, and which is better? Futures, without a doubt. And yeah, there's just nothing else to be said. Futures is going to be far superior than CFDs. Not that CFDs don't present opportunities, because I use CFDs as well. But if I had to choose one, it'd be futures without a doubt. No spreads. Well, I mean, there's spreads, but not the same slippage, all that out the window. Very professional, straightforward, gentleman's market. So with that, guys, hopefully you found this one insightful. That's going to be it from me today. Have a lovely rest of your Sunday. Enjoy the bank holiday off. And we'll be back to business here on Tuesday. So till then, guys, take care. Good luck and good trading.